Samsung Electronics saw profits plunge 53% in the second quarter as its chip business weakened, sending its share price today tumbling almost 3%. The South Korean firm reporting net profits of $4.38 billion from the April to June period. That's down 53% year-on-year. Now, revenue also dropping to $47.4 billion, down 4% for the quarter. Samsung has attributed the slump to weakness and price declines in the chip market, which it expects to continue in the second half of 2019. Now, the chip business is, of course, one of Samsung's top earners, and it reported a steep fall of 71% to touch $2.9 billion. Samsung is also facing Japanese enforced export curbs as a trade dispute builds between Seoul and Tokyo. The row now restricts the exporting of chemical exports that are crucial to South Korea's leading chip and smartphone companies, a move largely expected to affect Samsung's key products. South Korea's Kospi edging down and losing some 0.7% in trade, while shares in Samsung Electronics also closing down 2.6%. Now, for more on today's numbers, we're joined in the studios by Mark Matthews. He's Managing Director and Head of Research Asia at Bank Julius Baer. Good evening, Mark. Good to see you. So what's gone wrong for Samsung here?
Well, the first thing you just talked about, which is the memory business, and that's the largest contributor to their operating profit. And on the memory side, so there's two major aspects of memory. There's DRAM, that's what makes your phone run faster, and NAND, which is where you keep your pictures, basically. They're bigger in DRAM, and in DRAM, there's been no cut in investment or CapEx. So unlike NAND, where we're getting a price stabilization because they have cut capacity and investment, the DRAM prices are still falling. Okay. The other one I'd just point out is the phones. So they make very premium phones, and of course, as phones get better and better, more and more things packed into them, they've also become more expensive, and therefore people aren't replacing them every year like they used to, and that means the phone prices, the phone sales are slowing down.
Right. But there are also headwinds for Samsung from Japanese trade curbs. Do you see that impacting its business moving forward?
Yes, because there are three chemicals that go into semiconductors, and the Japanese have about 70 to 90% market share in those chemicals, and Hynix and Samsung combined are about 40 to 60% of semiconductor supply. So they need those chemicals, and nobody knows exactly how much inventory they have, but it could be as low as 6 weeks. In that case, they're in trouble.
Mark, how far do you see this volatility perhaps affecting other firms in the market, Samsung's competitors?
So if we're looking at the two major lines of business, memory and phones, on the memory side, the major competitor is Hynix. Hynix does more NAND, though. As I said earlier, NAND investment, NAND capacity production has already been slowing down, and that's why the prices have stabilized. Unfortunately for for Samsung, they do more DRAM, and there's still a lot of oversupply. So Hynix is less affected because they do more NAND. And on the phone side, Apple, clearly, we're also seeing a slowdown in those premium phone sales, but Apple have this amazing ecosystem of all the services they provide, cloud, music, apps. Obviously, Samsung wants to emulate them, and they try, but unfortunately for them, with the Android system, there's so many other good things on your phone, you're probably not going to use the Samsung apps.
Apple certainly, perhaps a lot more diversified, but it's not all doom and gloom for Samsung because it's seen some good news with its sales of its 5G equipment. So do you think it's sort of getting, it's benefiting perhaps a little from Huawei being on that US blacklist?
I don't think so, because Huawei is still doing extremely robust sales in 5G, including in Europe, interestingly enough. About half of their sales are coming from Europe. So it just shows you that the Europeans are not allowing themselves to be cut off from Huawei, which offers a very competitive product. But where I do think they have an advantage is that a lot of people will be having second thoughts about buying a Huawei phone, given the possibility that they'll be cut off from Android. And so I think where you're going to see people shift is, instead of buying, the top Huawei phone, they'll probably switch to buy a Samsung one instead.
So Samsung enthusiasts are greatly looking forward to this new foldable phone as well as the Galaxy Note 10. Do you think that the launch of those products is going to have a strong impact on sales?
Yes, I do, because I think that having, goofed with the reviewers in the folding phone, there's no way they're going to launch that thing to the public unless it's perfect. So I think that it'll be a success, and also the new tablet will be an extremely good product. But where I do think there's a lot of opportunity is the A series. They're going to be launching the new A series, which are their more mid-market phones, in September. And that's really where the future is in the mid-priced phones, because as I said earlier, the premium ones are so expensive now.
And there certainly will be lots of novelty interest in that foldable phone as well, won't there? So, Mark, thank you very much for coming into the studios to share that with us. I've been speaking there to Mark Matthews, Managing Director and Head of Research Asia at Bank Julius Baer.